In the second part of our video involving cash discounts, we're going to be using the net method. As you recall, the accounts that are used to record the sale, accounts receivable and sales revenue, are going to be the same for the gross method and the net method. However, the amount that will be recognized for the sales revenue will be different under the net method. In the net method, we anticipate that the customer will take the cash discount, and we will only recognize the revenue that we anticipate after the cash discount. So again, I'm going to make this formula a tad more complex than it needs to be. And we're going to begin by determining the discount, the trade discount. Again, one represents 100%. We'll then subtract the trade discount of 20%, and then we'll multiply that by our list price of $1,800. We'll then multiply that by the number of units sold, and now we're going to go one step further, and we're going to apply the cash discount. The customer will not be paying 100% of the invoice price we anticipate. We anticipate they'll take advantage of the cash discount and only pay 99%, or 1 minus 0.01. So right off the bat, we're going to recognize sales revenue that's adjusted for both the trade and the cash discount, or $126,720. So that will be the amount of sales revenue we'll recognize. We'll recognize an equal amount in our accounts receivable. In our first scenario, the customer is going to pay within the discounted period. So we're going to receive cash. The customer is going to have a zero balance in their accounts receivable. Cash will be going up by the amount that was invoiced, the $126,720, and our accounts receivable will be going down. What happens, however, if the customer pays outside of the discount period? Well, in this case, we'll be receiving the cash. The accounts receivable balance will go down to zero. All right, since we established the accounts receivable in anticipation of them taking the cash discount, our accounts receivable balance right now is $126,720. So there is going to be a difference between the cash received, because that customer is not eligible for the cash discount. They'll have to pay the full amount, which is the trade discount times the list price times the number of units sold, or $128,000. So we have received a check for $128,000. That's going to bring down our accounts receivable balance to zero, but our accounts receivable balance is only $126,720. So we need additional credits of $1,280, and under the net method, that difference is going to be interest revenue. It is not a negative discount. It's not an increase to accounts receivable. We show that as financing revenue, and we will then make a credit of $1,280. Most businesses apply the gross method. They don't anticipate the cash discount. The net method is used. The net result will be the same. If the discount is taken under both methods, the net revenue is $126,720. Under the net method, it's the amount we initially recorded. Under the gross method, it's the initial recording of revenue minus the sales discount. So both methods will produce the same amount of revenue.